This is very important. The S&P is now within 1% of making a monthly higher high. Another way of saying that we're really close to resistance. So what happens here is really important. You and me don't move the SPY chart or the S&P. Who does? Institutions and money managers. And right now they are easing up their allocations. It's been a slow month in April. So what does that mean? It means that they might have seen what I saw. I saw some evidence I'm wrong with a monthly lower low and closing below the low, which means all we need from here is 1% more. Can the bulls do it? Can we get to 525 or print that monthly higher high? And this is important because it looks like the market had a little bit of an epiphany today on the initial jobless claims. Why? Look what happened. Initial jobless claims come out, booms, market went straight up after that. But whoa, right? Like Jerome tells us, what about the totality of the data? Well, let's have a deeper look here. Why? Reality dawns. Initial jobless claims spike to the highest in 9 months. There we go. Notably, it's New York and California and Indiana posting the largest gains of initial jobless claims. So arguably the two most important states in the country. Man, people are losing their jobs there. Is that good or bad? Let's see what Jerome says, because whoa. The totality of the data. U.S. weekly jobless claims highest in more than 8 months as labor market eases. Okay. What this basically means is that we're seeing the highest number of people who are filing for initial jobless claims going all the way back to November of 2023. All right, that seems like so long ago in this market. And also, Fed-obsessed traders need the economy to get its story straight. I teased this out yesterday because there's a lot of conflicting data. Yes, it's part of why I'm flip-flop, and I wish the market went up in a straight line. I wish things were easy. But again, whoa. We got to make sure we're following price action. That's exactly what we try to do, even if it's not what we want to see. So what this tells me is that, man, I don't know what the hell's going on here. Last quarter, we got 1.6, which was a revision from the GDP now from 2.7. But now we're getting 4.2 basically, right? Happy 420. This is extremely high. So maybe what the market is seeing is that the economy got its story straight. Last month was a blip, and now it's time to go up, right? Higher lows, higher highs, and the US is the strongest game in the world. No one else is really doing this good. If we look across over the pond to the UK, Bailey spurs traders to price 50% chance of a cut in June. We heard about Christine Lagarde wanting to cut in June. We heard about Canada wanting to cut in June. What has he said? Neither ruled out or planned, which means flip a coin. Let's see what happens. If they go first, Jerome Powell can likely go second. And like I mentioned, this is important because investors are not sure where we're going to go. Pretty low allocations here for April. All right. The other thing I want to show you is that, let me just make sure I got my lines here. Look at where we were a month ago. We briefly touched on this yesterday. We were at 62. Boo, all the way down to fear. Didn't quite get to extreme fear, which is what I was hoping for. But we're sitting here at about 44 today. Why does this matter? Well, let's have a look and see what the charts did. So we look here. That's where we were a month ago. Here's where we are today. The S&P has actually done a full reversal. So the S&P is at the equivalent of 62 for fear and greed here. All right. What about the NASDAQ? Well, here's where we were a month ago. Here's where we are today, roughly at the same spot. So one of these is got to give. Either fear and greed is going to go big booms, right? All the way back up. Investors have to allocate. Again, you and I don't move the chart. It's money managers, it's institutions, and these guys just aren't convinced. And we're sitting right on resistance. So what does that mean? Man, retail's probably going to get clobbered if they don't know what they're looking for. Other thing to note here is that the S&P actually did hit its target. That is awfully constructive. It's also awfully constructive because we've been talking about our 4-step dip recipe, and I'm getting more evidence that maybe we're going to go back up now. All right, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel, that would be greatly appreciated. So specifically, what I'm looking at here is that we now have 4 days back above the 50 DMA. That's now claimed. We've clearly stopped going down. That happened going back here to the beginning of May when we reclaimed this downtrend. We also have, I think 1, 2, 3, 4, 5. We have 5 out of the last 6 candles, which are hollow, which signal an expansion or dip buying. And hey, are we going up? Let's have one more look here on our weekly chart. Why? Well, we talked about this morning. Come on, TradingView. Here we go. What do we got here? Well, we got 1 higher low, 2 higher low, 3 higher low. That's probably a reversal. The part that gets me a little bit uneasy is that there's actually a weekly gap here, though. We'll deal with that tomorrow. If you guys want to hang out, subscribe, and we'll go through it. But here is other news that came out today because I'm watching reactions to stocks on on news. Apple to power AI tools with in-house server chips this year. Man, that is like the perfect storm of words in there, right? AI, cloud, in-house, boom, this year. Let's go. Do it, Tim. But what's interesting is that Stanley Druckenmiller actually sold more NVIDIA and says that AI might be a little overhyped now, but underhyped in the long term. Interesting. This guy's smart, much smarter than me. So when we look at the reaction here in roughly the last, let's just look at today. So today, Apple's flat, Tesla's red. And we look here, and we're looking at Boeing as well. Where's Boeing here? I think Boeing is somewhere in here. Oh, man, where is this thing? Where's Boeing? 1 second here, because this is important. Is Boeing over here? Here it is. It's flat. And the reason why that's important is because BP keen to buy Tesla supercharging sites for U.S. expansion. $1 billion to Tesla. Where's Tesla? Man, it's red. So bullish news for Apple. Bullish news for Tesla, but not both stocks had a bullish reaction. And then Boeing, safety claims pro by the SEC. Oh my God, right? Yeah, but stock's actually doing fine. This news broke just after the close. But if we zoom out for 1 second here to go to roughly the last month, the same period we're looking at here for fear and greed, again, all the way down, stocks have not really recovered. Now let's look to the heat map for that same period here. Well, Apple's green, pretty bright green, up by 9.4. Tesla's basically flat in the last month. And then where's Boeing? Oh my God, Boeing's actually flat. Bad news is not making it go down. Interesting. Yes, exactly. That's interesting. What I want you to focus on as we go into the end of the week is that Jerome Powell actually speaks on Tuesday. I cannot find the actual schedule, though. I was looking here to the FOMC calendar. I don't see it here. So sometimes there are errors on investing.com. But what do I see here? Man, next week is like really important. I just told you there's a weekly chart. Oops, there's a weekly gap on the chart right here. So yes, we have 3 times higher lows. We're right around resistance. But here's what I'm paying attention to into next week: inflation and Jerome. So we have that quarter over quarter revision for Q1. I'm not sure if that's a preliminary print. I think it's a revision. We already got the Q1 print, but we got PPI, we got Jerome, we got CPI. Oh, that's GDP out of Japan. My bad. And then we got CPI out of Europe. Whoa. And then we got PMI, initial jobless claims. Man, it's like an inflation-packed week next week. Yes. And this really matters because that is the most option-implied move for the S&P. It's the CPI, then it's NVIDIA, and then it's payrolls. So like I said, right, we're right around resistance. I don't know what's going to happen. I hope it's bullish. Why? Man, I got a lot of stocks. I'd like to make some money. If we can't make above 525, though, this is where I get a little bit concerned that we're likely going to fill this weekly gap next week. Again, could, right? Maybe, I don't know. I'm receptive to it. Why? Well, look, the market's going to move. It's the biggest implied move for the next 30 days, right? NVIDIA is pretty close. You're at 17. Payrolls is at 16. So that really matters. And again, the expectation for Fed cuts are now starting to go higher. Why? The rest of the world looks like crap, right? World sucks. It's only the US that's doing well. So what's going to happen at the end of the month? I think we have to pay very close attention to what the charts are telling us. Why? Like I said, I'm seeing evidence that the dip is now not underway, but because we're so close to resistance here, and there was actually one other chart that I wanted to show here. It's this one here. So if now we go back to, let me just find it here for 1 second. Thank you for being patient. This one here. So what we talked about is that these targets are generated by our system, the algo.com, which basically means that we're looking for an oversold condition. So as we were going down, we stopped getting oversold and hit our target. The S&P hit it. The NASDAQ is not. So what I would like to see is the NASDAQ to actually hit this thing. And then if next week we get a little bit of a sell, I would like to see this 50 MA hold. Same thing over here for the S&P. I'd like to see us actually backtest and hold that blue line, which is the 50 MA. Why? A, because 520 and 443 are not good enough. Hey, it's nice. It's good progress. It's not good enough, though. Why? Because we're still in a monthly lower low with an inside bar right around resistance. If I'm confusing you, all you need to do is subscribe to the channel to make sure you don't miss a video, because I'm going to update you on all of this. Very last thing here. Other charts look similar too. We talked about the Dow, but look what it did, baby. Whoop! It blew through that neckline right here. So the S&P, the Dow Jones, they're doing quite good. It's actually the NASDAQ, which is struggling a little bit here. Why? Let's just look at percent gains on the day. So if we go to the one-day chart, the S&P is up by 0.6%. The Nasdaq's up by about a third of that. It's only up by 0.2. All right, that's weird. Yep, Bitcoin's up by nearly 3%. So risk on. Gold is up. Oil's up. The Russell's up by 1%. The Dow was up by almost 1%. The Magnificent Seven collectively, though, this is likely where technology is having a little bit of issues. Why? NVIDIA, Tesla are both down. Why aren't these charts loading? All right, well, that must be a sign. Click on the video on the left or subscribe on the right, and I'll see you guys at 9:15 a.m. tomorrow. Thank you very much.